Welcome to the Value Investor TV podcast. This is the podcast to help you grow your wealth and become financially independent. My name is Becco and my partner, Ari.
Hello.
Thank you guys for joining us in our 99th episode. It's exciting. We're approaching our second century in this podcast. Because of the coronavirus and what's happening in the obviously with the market and the entire world affected by this pandemic, we thought that we would talk about the coronavirus again in this episode and how it relates to you and your investment portfolio. So before we do that, Hari, can you give us a quick disclaimer?
Yeah, this is the Value Investor TV podcast. We are a podcast that helps you grow your wealth and become financially independent. But we are not financial advisors. We don't know your specific financial situation. So please use this podcast for educational purposes only and contact the appropriate advisor if you need assistance in those areas.
Great. Great. Maybe just a quick housekeeping items. We don't, since we're not analyzing a company today, we're not going to use a checklist, but if you guys take a look at our previous episodes, we have several episodes where we are analyzing a specific company and we use a checklist to analyze them. So if you like a copy of that, you can always email us at info@valueinvestor.org to get that checklist. And also we have a Slack channel that we open up to our listeners, and in there you can talk to us directly, chat with us, and also the rest of the community, our listeners. So if you like access to that, you can also email us to the same email address, info@valueinvestor.org. All right, Hari. So coronavirus, what is...
Yeah, nobody's heard of that before. So we haven't been, nobody's talked about it or anything. So
what is it? Yeah, exactly. What does it mean to you right now? Let's just start there. How do you feel about it? What's going to happen in the next few weeks? Because people are talking about reopening the economy now, and some countries are already instituting a few measures to get to that. How are you thinking about it now at this point?
Well, I think we are at a point right now where we have to start thinking about this as, as something that is more trying to weigh the balance between the healthcare system and, the health of the economy, right? And at this point, the economy is kind of taken a huge blow. We've already seen a large number of people, going to unemployment, going on the getting unemployment insurance or getting paid for being unemployed, and the number of people that are in that category, I think in a 2-week period has exceeded, every other, pandemic, or sorry, not pandemic, but every other economic shock that we've ever seen. So this is far worse in that regard. But the interesting thing about it is that there is no systemic problem that is occurring like we saw in the banking sector when the banking sector went out in 2008. So, but that doesn't mean that there are a bunch of businesses aren't either closing or are unable to pay rent or all that. So how quickly can any of these things come back? And, and we saw a couple of weeks ago in the U.S., we've passed a stimulus bill was totaling about $2.2 trillion. And a lot of that money was going to small businesses to help, fund their payrolls. And I think $350 billion has already been allocated to small businesses for loans and other things. So, but even that hasn't been enough to stem the tide of a bunch of closures, a bunch of businesses that couldn't withstand, that were basically operating month to month, from a budgetary standpoint, that are probably not going to be able to either come back or are not going to be able to operate at the same capacity that they did before, right? That either closing stores and so forth. So, in a lot of ways, there's this discussion about whether we were trying to bend the curve, we're trying to reduce the number of cases, and in a lot of places outside of New York, we haven't seen a lot of cases actually. Right, we're looking at a fairly small number of cases in the rest of the United States, and with New York kind of being the epicenter of all of this. So I think what is going to happen is that regionally we're going to have to start opening up the economy. So whether that is economically has to occur in in places that are far distant apart, like Montana, South Dakota. Some of these states didn't even have any sort of shutdown, quote unquote. And other states, like Texas, where we've seen less than 20,000 cases, the burden hasn't been that much, could probably reopen a lot faster than the state of New York.
Yeah. So on that topic, I read an article, an op-ed actually from Wall Street Journal talking about, this is not directly related to the economy at large, but hospitals right now. Hospitals and healthcare providers, there is an unintended consequence of the shutdown and allowing people to, not allowing, but canceling all the elective surgeries or elective procedures in healthcare and hospitals, which is the main source of revenue for these hospitals, because there's an institutional policy that says we will punt or cancel altogether these elective surgeries, elective procedures, which, as I mentioned, is the main source of revenue. These hospitals are being crippled right now, and as it relates to that and what you're talking about of regionalized kind of opening in an incremental way for places that hasn't been impacted as much as New York or Boston or say even San Francisco or Seattle, it does make sense to me that as to kind of institute this rolling basis approach of opening the economy. And as an example, this hospital finance is a kind of case in point for that.
Yeah, and there are a lot of hospitals that are already operating off of very thin margins and really needed, really need the support of elective surgeries. They need to have their hip replacements, knee replacements, their hernia surgeries, the things that are kind of the bread and butter that bring in money to the hospital, to allow them to also then operate at a loss. Patients who come in with COVID and other things, that kind of stuff is, when you turn it all off, you basically have a large part of the economy that, healthcare accounts for, a significant percentage of, the GDP of the country. So if you turn off that faucet, what we're seeing is healthcare is being shut down, even though we think, this is a pandemic. The people in that industry who are, it's not just doctors and nurses. There's lots of ancillary people who are being furloughed as we speak. And so these folks are not able to get, they're going to be out of work. Hospitals are part of the bailout package, but I don't know how much and how quickly it's going to be able to prop them up. And there actually are publicly traded hospital groups, one of those HCA being one of them. So it'd be interesting to look at their financials also and see how much of an impact they're going to take from something like this.
Yeah, exactly. I think hospital generally is an interesting kind of microcosm of what we were seeing with this pandemic. But there are other areas that is totally impacted by this. Namely, obviously, the hospitality industry, right? The food and beverage industry. There is the great famous oil industry that's been very much disturbed in this pandemic with both the supply shock and the demand shock. So maybe we can go through one of these, one by one and kind of talk about them a little bit. All right.
Yeah, so I think it's going to be interesting to see, like, the airlines have gotten a big bailout. We've seen them, and so that's a big part of the hospitality thing is people have to go somewhere for, their vacation, and they typically stay in a, hotel or something like that. And there's a lot of money that's being spent on conferences and things like that. I imagine those kind of things are going to be the last thing to recover, after COVID. And they're going to be the last things that'll get opened up, right? I think Facebook announced this past week that they've canceled all large gathering events until June of 2021, which is, it's a full, 13, 14 months away from now. So what does that do for businesses and other things that spend money on, and think about that from, the perspective of you travel to a place, you spend money in the local economy. Like a city like Orlando, Florida hosts tons and tons of vacations, but it also hosts a ton of conferences, right? So you cancel a conference that would have attracted 20, 30,000 people. And how much impact does that have on the economy, right? We talked about Austin canceling South by Southwest, which counted for several $100 million to their local economy. So it's a shock that, government bailout and things like that aren't going to help, those things, because they may take a long time to recover. So I'm hotels, a lot of those hotels are not being used at all right now. And if they are, it's, 90% reduction of their, coronavirus volume. They all have rent to pay. They all have, people that, employees that they have to cover. So a lot of these people are now furloughed and they're not paying rent to, their leaseholder. So that, the economy is, it's all tied together, right? It's the thread that we're pulling on the sweater that's all now unraveling.
Yeah. I think one interesting kind of conversation that's been emerging with the pandemic is the over-reliance on other countries for supplies.
Yep.
Right. So you're seeing, for example, like masks, a simple thing like masks, we can't even produce a lot. We can't produce at a rapid rate to take care of our own population. And this is not just happening in the US, this is happening all across the world, right? So like given that, I think that is a case in point for this kind of change in frame of mind and how we're thinking about efficiency, right? In the past, it was all about efficiency. We were totally optimizing for efficiency and lower costs and fast turnarounds, just-in-time delivery, all of those things. And now I think the conversation is slowly drifting towards resiliency. How do we make sure that our supply chain can be resilient in the face of pandemic, in the face of war, in the face of various things? So I think I think to me that's going to be interesting, a concept, a mind shift that might play out in various industries.
Well, and I think we, regardless of your, leanings politically, the trade war that the U.S. had with China actually mitigated some of this supply chain damage that we're seeing. When the tariffs got initially put on China, a lot of companies just shifted their manufacturing from China to other countries in Southeast Asia, or brought them back to the United States, or moved them to other locations around the world. Obviously not all of it, but I would expect that part of this is going to be a lot of companies are going to pull out of places like China. If the country shuts their factories down like they did in Wuhan and other places, it's going to be very hard to maintain a supply chain. And then now you have, the hydroxychloroquine medication is actually manufactured in India, and there's a lot of demand around the world now for this drug, which I don't know if the efficacy has been proven yet, but there's a lot of demand to purchase, the supply, and India is actually holding on to their supply. Right. So this is a generic drug that in normal circumstances, you could probably have a country learn how to do this and spin it up in a generic drug facility in 6 months. Now you don't have the luxury of doing that. So, these supply chains are very fragile, and, we have to really pay attention to this, because shocks can come out of nowhere. And I think we're seeing that right now, that basic things like masks that 3M would buy in bulk and then ship to the, hospitals are now being used at a much higher rate, and they can't replenish the supply fast enough,
Yeah, for sure. You mentioned pharmaceutical industry, like India, for example. But when I first got my hands on, I think it was NVIDIA when I analyzed it a few years ago. That was when I really got to understand the complexity of the supply chain, right?
Yep.
When you are making shoes, for example, or clothes, supply chain isn't as complicated, right? Maybe a few stops along the way, and then you get to the customer. But then you're talking about a high-tech semiconductor industry making very sophisticated chips. There, I got to really explore the complexity of it all, right? You are
Yep.
getting things from Korea, you're getting things from Taiwan, and assembling it and also from Japan and Norway and all these areas, and then you assemble them and you design them. It's a very complicated process, and I think that is a case in point for the complexity of some of these industries,
Right.
where you have built out a very robust, maybe not robust is the wrong word, but very complicated supply chain. And if one piece of that puzzle gets knocked out for some reason, you're talking about a disaster. I mean, everything collapses. It's a domino effect.
Yeah, and I think I think any company that has, we haven't really thought about it from that perspective, but all these companies that manufacture things and sell them here in the United States are at this point don't really manufacture it. They're outsourcing it to somebody to make it, and then they just buy it in bulk, slap their logo on it, and sell it. The hit that they're going to take from this is kind of unknown at this point, right? We don't know when those supply chains come back. We don't know, people start going back to work, but then these goods are not even available to purchase, right? They can't get raw materials or partly finished materials fast enough to build stuff. It's going to be very interesting. Like, I think the next year or two, as it stands in the middle of April right now when we're recording this, the market has kind of shrugged off a lot of the bad news and has kind of crept up from its low to about 30% higher from the low than it was, at the bottom. And I'm a little surprised by that because, the unemployment numbers look awful. The everything looks terrible, right? And if you are on our Slack channel, you've probably seen that a lot of people are just surprised that this hasn't gone back down, since the end of March, when it was 30% lower than it is now.
Yeah, exactly. That is quite surprising to me also. And I guess as it relates to that, I want to pose you this question, which is, in our checklist, we go through various things in terms of competitive advantage, and then we go through the financials and various things to measure the robustness of this company as an investment vehicle. Now, one of the considerations we didn't quite consider is this aspect, right? Focus on efficiency. I think we do talk about that, but focus on resilience, right? Focus on resilience. We don't quite harp on that as much as we perhaps should. So maybe I want to pose you this question. Do you think we should, as investors, think about that more so in the future?
I mean, it's hard to say that anybody would have really predicted this. This is obviously something that's unique in the last 100 years. We haven't really had anything like this, right? The flu of 1918 was kind of the last time anything like this has been around. And certainly the economy didn't shut down then, right? This is the first time we've basically shut down the entire world's economy all at once. I would say that the pain that we are seeing right now is something that we should kind of predict, but it's going to be hard to say in the future how to mitigate that, right? Like, you look at companies, the annual report doesn't necessarily tell you, well, we buy some of our goods from India, China, etc., right? They may mention it, but they're not required to. And they may not mention a lot of things about their own the resiliency of that pipeline of items that they sell. Obviously, companies that are like tech companies don't have this issue, right? They are largely unscathed in this market. largely because their employees can work from home. They're minimally impacted because, there's no risk really for, a lack of sales and things like that. But even they'll be impacted. Like we're seeing that Facebook and Google, nobody's buying advertising right now, right? And I think the numbers are going to be shocking to a lot of people because they're going to say, well, it's just going to come back. I don't know that it is. I don't know that it is going to come back the way that people think. So the resiliency here is a hard thing to measure. I think it's a hard thing to know where it's going to fail. And I think the one thing that we haven't really mentioned here, and I think is going to be interesting, is, all of the stimulus spending is going to create inflation.
Mm-hmm.
So what is the purchasing power of the dollar going to be when we've just added, we've basically put $2 trillion into the economy that wouldn't have come in, right, by printing money. And then that may not be the end of it either,
Right. Yeah, just maybe a couple points there. You talked about the difficulty of predicting a pandemic of this nature, right? Difficulty of predicting an event like this where it really tests the resiliency of your business. And this is not, answering your questions. This is just a commentary. I've noticed that, some businesses actually have like pandemic insurance.
Mm-hmm.
For example, like restaurant businesses, they have insurance for pandemic. They have, and when we talked about cruise, the Carnival industry, the Carnival company, they had an insurance. They took out an insurance for war-like situation. So there are pockets of industries where they are thinking about these things, but as you mentioned, it is very difficult. I mean, by its very nature, it is unpredictable. So, but I think more and more, this is really about risk mitigation and thinking through problems. And perhaps we should do more to think about these risks, even though they might not be very, very easy to predict. We should at least kind of think about them.
Yeah, and I think what we are going to see was the things that are not different about this economy, this change that we've seen in every other recession, is that businesses that had high levels of debt, that had a lot of leverage on their balance sheet, are the businesses that are going to get hurt the most, right? And then they may not survive, right? So this is how, if we think of the economy as a herd of, wildebeests or whatever, right? A herd of animals. The weak are the ones that get called off in this kind of scenario, and those are the weak ones are the ones with too much debt. And I think if you've been listening to the market, you've seen JCPenney, which was on its which is on life support to begin with, skipped a bond payment for with the intent of renegotiating their terms with their bondholders, which is not I think a lot of people were saying that they weren't going to do well, but 2 months ago they were like, well, they'll be okay, right? And I've heard a lot of people who are saying, oh, JCPenney is cheap, it's undervalued, et cetera, et cetera. And now they're trading, under $1 a share, right? From $3 or $4 a share. They've lost 75% of their value. So, but the thing that was interesting to me about all of this discussion is, when you look at stocks in the US, there were many companies that were trading at a PE of 30, 35, that had single-digit growth rates, that had, a lot of debt, and people were happily buying them as if they were going to continue to be fine, and had really no way of, paying off this debt. I think those businesses are going to get, if they haven't already, are going to get crushed. Their stock price is going to get crushed, as it should be, right? And I think there's a lot of people who just are kind of oblivious to this, right? This is why we are value investors, is that we don't want to ever pay too much for a business, right? Because the rule number one is never lose money, And the way you don't lose money is by buying a business that has a very strong moat and not paying too much for it. And I think, the resilient part of this is always the same, which is the moat, right? If you cling to businesses that have strong, resilient moats, you will cover yourself.
Yeah, absolutely. Yeah. I think we should transition, as you kind of briefly alluded to, about the government, writing checks. And you mentioned that with the enlarged balance sheet of the Federal Reserve and many central banks around the world, what would that mean for us as investors? What would that mean for us as consumers, active participant in the market? And you mentioned that this could create an inflationary force. I also heard a counterpoint to that, which is that it might create a deflationary force despite all of the printing of the money. And the reason for that is because people are not going to spend, right? People are not spending. Even if they have money in the bank, they're not going to go out and buy things because the economy is so depressed. What do you think about that?
I mean, it's certainly possible. I think, my spending habits, for the month have gone down significantly, and I have, I've obviously there's no restaurants to eat at, but my takeout, has not been very much, and I'm not spending a lot of money on things, that I would have. Here in Houston, we had the rodeo in March. I typically take my family there at least 2 or 3 times, and we spend, $100, $200 on rides and, tickets and all of the things that we would do. So that money is not being spent, right? And, the other things that we would spend money on are not being spent on either. And I think there is something to that, right? Obviously, we're not taking vacations. We're not doing those things. So I think there is some component to that. There's part of it is also going to be there may not be money to spend on because, the supply chains are disrupted and so forth. And, I think this is also kind of the shock for a lot of people that there's no savings that we had. So maybe the savings rate will actually increase, So, I think there's something to be said for that. But I do think that this is a fairly significant amount of money that's being shoved into the economy all at once, right? And so it's going to be interesting to see how where this evens out, and the Fed will obviously play with interest rates to keep inflation from going up too much. So
yeah, it's been I've been having conversations with my friends and my colleagues about what does this all mean, right? This is a stimulus package that is unprecedented and in a very short period of time. I am not an economist at all, but it's just it's puzzling to see what the outcome. It's very very interesting to see what the outcome of this all is going to be. And I think U.S. specifically is in a better position than many other countries because of the fact that U.S. government is printing dollars, which is the base currency for the world. So U.S. is better off than many other countries, and I wonder what that means for example, countries like Korea, for example, or maybe not so much Japan, but maybe like Australia or other parts of the country or parts of the world. What would this mean for them? So
yeah, it's going to be a lot of it is still unknown at this point, right? Even though these bills are getting passed and the stimulus is occurring, this is unprecedented in a lot of different ways, right? I do think that there are some economies that are going to be better equipped to recover. States that were unaffected, New York is, I think, going to be a lot harder hit. Countries that have had lower, overall impact, like South Korea has had, been able to contain a lot of the infection transmission, but they still have a lot of the social distancing. They have a significant privacy problem now that they've created for themselves by monitoring their citizens very closely. in order to control this. And I think there's going to be some, it's going to be a lot of things that we're a lot of things in the world are now going to be in uncharted territory, I think. And so it's going to be very hard, but I don't think that means that good businesses that are resilient are going to be things to ignore in this case, right? And I think if you find a good business that has a strong moat and is cheap, then you should be buying it.
Yeah, I think that's a good kind of statement to end this episode, right? The fact that resiliency, right? We talked about resiliency in the middle of the episode as the key item that we need to be looking out for in this new period. And resiliency is ultimately derived from competitive advantage. So making sure that you thoroughly understand and do your research in the companies that you own and really understand the competitive advantage, and therefore you're able to derive some comfort in the fact that this company has a degree of resiliency that can withstand the blow of a pandemic like this. Okay, awesome. Any other comment, Tari, before we close out this episode?
No, I mean, I think, we are, as value investors, we don't try and focus a lot on the macro part of the economy. We focus on the micro, which is at the individual business level. It's hard to not speculate at this point, like, what's going to happen to a business and so on, or businesses as a whole. But I would still tell people to focus on individual businesses and as opposed to looking at the market as a whole, because there are going to be pockets of the economy that are going to be harder hit, and there are going to be other pockets that are doing better. But that doesn't mean that traders and short sellers and all of these other things will not bludgeon everyone equally, right? So just pay attention to these, because you may find a bargain amongst the dropping, stocks, and it's a good time to buy if if you find the right business.
Yeah, great. Awesome. Thank you guys for listening. I hope you guys stay safe and your loved ones stay safe. Thanks again for listening, and we'll see you guys in the next episode.
Thanks.